continue the training with other taxes, payments, and refundable credits. Refundable credits put money into your pockets, so I'm anxious for us to talk about those. This information can be found under tab H of the 4012. Other taxes. Other taxes are different from the income tax from the tax tables or figured using the tax computation worksheet. Other taxes include self-employment tax, Social Security and Medicare taxes on tip income, additional taxes on IRAs and other qualified retirement plans, repayment of the first-time homebuyer credit. These amounts are usually calculated on their own form or schedule and entered on Form 1040. They are found under Part 2 of the Schedule 2. The taxes are added after the non-refundable credits are calculated. The non-refundable credits do not reduce the other taxes. So remember, the non-refundable credits do not reduce the other taxes. But no worries, TaxSlayer takes this into consideration. The self-employment tax, or you may hear it referred to as the SE tax, and Medicare taxes collected primarily from individuals who work for themselves. We're talking about the barbers or the hairdressers, doctors, even the yard man. These individuals are generally classified as self-employed individuals, and I'm sure you talked about them earlier. It is similar to the Social Security and Medicare taxes withheld from the pay or of most wage earners, except a self-employed individual pays both the employee part and what would be the employer part. So in other words, the self-employment tax considers both parts. Payments of self-employment tax contribute to the taxpayer's coverage under the Social Security system, just as an employee. Note, if net business income was $400 or more, taxpayer is subject to self-employment tax, and TaxSlayer has already calculated this. It is a Form 1040 SE that TaxSlayer automatically populates based on the information that has been input into TaxSlayer. Social Security coverage provides the taxpayer with retirement, disability, survivor, and hospital insurance, Medicare benefits. And I'm sure you've talked about that when you were talking about income. If you turn to page H-1 of the 4012, you will see what the screen looks like in TaxSlayer for other taxes. You will see a section for the self-employment tax, which we'll talk about. You'll see an icon for tax on unreported tip that we'll talk about, tax on early distribution that we'll talk about, the repayment of the first-time homebuyer's credit. So the self-employment tax is the first one that you would see on this screen. There's a new part to the Schedule SE that will allow filers to figure the maximum amount of self-employment tax that may be deferred. This came about as a result of the CARES Act. The entire amount of self-employment tax will be reported on Schedule 2, Form 1040, line 4. The CARES Act allows self-employed individuals to defer payment of the employer's share of the Social Security tax. Half of the deferred amount must be paid on or before December 31st, 2021, and the other half by December 31st, 2020. Self-employed individuals may use any reasonable method to allocate 50% of the Social Security portion of self-employment tax attributable to net earnings from self-employment earned during March 27th, 2020 through December 31st, 2020. For an example, an individual may allocate 22.5% of the individual's annual earnings from self-employment tax to the period from January 1st, 2020 through March 26th, 2020, and 77.5% of the individual's annual earnings to the period from March 27th, 2022 through December 31st, 2020. So, I know that was a lot to disseminate, but here again, page H1 of the 4012 will give you more information. And the self-employment tax, again, goes on Schedule 2, Part 2, Line 4. The next section, or the next tax, other tax that we want to discuss is tip income. All tip income is subject to federal income tax, and I'm sure you talked about this when we talked about income. Tips less than $20 per month that are not reported to the employer are not subject to Social Security and Medicare taxes. However, $20 or more per month in tips from any one job must be reported to employer, and that'll appear in box 1 of the W-2. If the employer allocates tips to employees, the amount is reported on Form W-2, box 8, and included in income on Form 1040. That's why it's so important that you mirror in TaxSlayer the source documents, such as the W-2. Social Security and Medicare taxes are not withheld on allocated tips. The employee pays both the Social Security and Medicare taxes. This would appear on Schedule 2, Part 2, Line 5. The next other taxes that we will discuss is IRAs and qualified retirement plans. If a distribution is taken before taxpayer reaches 59.5 and is not rolled over into another qualified plan or IRA, and no exception applies, which we will talk about, taxpayer is subject to 10% penalty of distribution, and it's really considered as an other tax. A Form 5329 is required. Line 6, Part 2, Schedule 2 is where this information would be entered. We talked about exceptions. Page H-5, 4012, gives the exceptions to this penalty. And the ones that we commonly see is number 9, IRA distributions made for purchase of a first home up to $10,000 per taxpayer and paid within 120 days of distribution. Educational expenses, number 8, or medical expenses. These are the ones that we commonly see, but there are exceptions 1 through 12. Now there is an additional exception that's new this year, and it came about as a result of the CARES Act related to the coronavirus. There are times when special legislation is passed to provide assistance and emergency relief for taxpayers. In general, Section 2202 of the Coronavirus Aid, Relief, and Economic Security Act, CARES Act of 2020, provides for expanded distribution options and favorable tax treatment for up to $100,000 coronavirus-related distributions from eligible retirement plans, as well as special rollover rules with respect to such distributions to qualified individuals. And there are a lot of restrictions. Eligibility retirement plans include certain employer retirement plans, such as Section 401k and 403b plans, and IRAs. As expanded under Notice 2020-50, a qualified individual is anyone who is diagnosed or whose spouse or dependent is diagnosed with the virus or the coronavirus disease. 2019, collectively COVID-19, by a test provided by the CDC, authorized under the Federal Food, Drug, and Cosmetic Act, or experiences adverse financial consequences as a result of the individual's spouse, or a member of the individual's household. That is, someone who shares the individual's principal residence. And these experiences would include being quarantined, being furloughed or laid off, or having work hours reduced due to COVID-19, being unable to work due to lack of child care due to COVID-19, closing or reducing hours of a business that they own or operate due to COVID-19, having pay or self-employment income reduced due to COVID-19, or having a job offer rescinded or start date for a job delayed due to COVID-19. Who are qualifying individuals? Qualifying individuals that receive coronavirus-related distributions are not subject to the 10% additional tax on early distribution. And pay close attention to this, because you will see this again in one of our scenarios. In addition, these distributions may be included in income ratably over a 3-year period, starting with the year in which the distribution is received, and may be repaid in part or full to an eligible retirement plan, provided that the repayment is completed within 3 years after the date that the distribution was covered. And again, all this information can be found on page D35, 4012. If the taxpayer chooses to spread the distribution in their income over a 3-year period, or repay the distribution after the due date for filing the return, then the return is out of scope for VITA TCE programs. What does the 5329 look like? H-4 of the 4012 shows you what the 5329 looks like. And here again, you simply answer the questions, whether it's the testing taxpayer or the spouse. You enter the amount of the distribution. Then you select, if you have an exemption in which, or an exception, then you would check the drop-down box. Click on the drop-down box and check the one that applies. And remember I said the coronavirus is new for this year, and it would go under other. And again, like I said, you will see this in advanced scenario 8. If you have any questions, you can put those in the chat. The next tax that we will talk about is the first-time homebuyer credit. If the taxpayer received the first-time homebuyer credit for a home purchased in 2008, generally they must repay the credit over a 15-year period in 15 equal installments. The repayment period began in 2010. However, if the home ceases to be the taxpayer's main home before the 15-year period is up, the taxpayer must repay all remaining annual installments. This credit is reported on Schedule 2, Part 2, line 7B. H-1 and H-2 of the 4012 shows the screen for this credit, which becomes a tax. How will you know if the taxpayer has the first-time home buyer credit that must be captured? Well, of course, you can ask the taxpayer, but the other source is your intake form, Form 13614-C. Under Part 5, Life Events, number 6, receives the first-time home buyer's credit in 2008. These lifetime events also address other issues such as cancellation of a debt, the disallowance of an earned income credit, if estimated tax payments have been made and want to be applied to another year. So this section is very important, and it is critical that the boxes or the correct box is checked. Now, with this home buyer's tax credit repayment, if taxpayers do not tell us this, or it's not entered on the intake form, and we prepare the tax return without this, then the tax return is going to reject. We will not be able to process it until that information is entered, and that just delays the refund for the taxpayer. Okay. Any questions? Put them in the chat, please. Now we're going to talk about payments. The federal income tax system is a pay-as-you-go system. That means tax is paid as income is earned or received during the year and is referred to as withholding credits. You'll find this on the W-2 or the 1099-R. This information is automatically picked up because you've entered information from the W-2 into TaxSlayer. Many taxpayers have income from self-employment, dividends, interest, capital gains, rent, and royalties. The pay-as-you-go system also applies to this income. if the tax due on this income exceeds certain limits, estimated tax must be paid quarterly by the taxpayer. They must complete a Form 1040-ES. If estimated tax payments are not paid when they are required, there could be a penalty. Taxpayers who overpay their income taxes in 1 year can apply all or part of their overpayment to the next year's estimated tax by indicating the amount that they want to apply. Taxpayers can get an automatic 6-month extension of time to file by submitting Form 4868, and that form is known as the Application for Automatic Extension of Time to File U.S. Individual Income Tax Return. This form extends the time to file until October 15th. However, the form must be filed in order for the extension to be effective. Now, this is only an extension to file, not an extension to pay. And we advise taxpayers to go ahead and file an extension by April 15th. I'm sorry. If taxpayers do not pay their taxes by April 15th, they will owe interest and may be charged penalties. So in other words, this is an extension of time to file, not time to pay. That's why we encourage taxpayers, if they're going to owe, to go ahead, especially and file a Form 4868, because there is a hefty penalty for failure to file a timely return, and that's 5% per month up to 25% per year. Page H-7 of the publication 4012 shows you the screen in TaxSlayer that you will be inputting this information into. For instance, federal and estimated tax payments, that's a section that we will see a lot of, or apply overpayment to next year's tax return, or amount paid with the extension. So that's what the screen will look like. That pretty much covers all of the payments that you would see in TaxSlayer or on the tax return. Federal estimated tax payments, apply overpayment to next year's taxes, and the amount paid with an extension. Now, we talked about non-refundable credits, which we said would not put any money in your pockets. Refundable credits will. Refundable credits can actually put money into a taxpayer's pocket. Refundable credits, you can get a refund even though you did not have a tax liability, or you're not required to file a tax return, just dependent upon the situation. Most of the refundable credits that we'll see is the additional child tax credit, and a biggie for us is the earned income tax credit that we'll talk about a little later. What is the additional child tax credit, and what are the general eligibility requirements? Note, make sure the taxpayer credit hasn't been disallowed previously. If previously disallowed, then Form 8862 has to be completed. And we'll talk about that a little later in tab 1 under the earned income credit. And remember, I indicated earlier that part 5 of the intake form would include whether this credit has been disallowed or not. The child tax credit is generally a non-refundable credit, which we talked about. However, certain taxpayers may be entitled to a refundable additional child tax credit. It's going to put money in the taxpayer's pocket. These are the requirements. Taxpayers with more than $2,500 of taxable earned income may be eligible for the additional child tax credit if they have at least one qualifying child. Taxpayers with 3 or more children may also be eligible for the additional child tax credit regardless of their income. There is a limitation of $1,400 per qualifying child. And here again, you don't have to worry about how this is being calculated because TaxSlayer is going to automatically calculate this for you based on the information that you have input into TaxSlayer from the intake sheet. Now, Schedule 8812, Additional Child Tax Credit, is used to calculate the allowable additional child tax credit. This was talked about in tab C, Dependents, and the worksheet in the instruction booklet for additional information, including definitions and special rules related to an adopted child, foster child, or qualifying child of more than one person. And again, all of this can be found in G2 of the 4012. Now, the additional child tax credit will appear on line 28 of the 1040. And here again, TaxSlayer automatically puts that information there based on the information that you have input into TaxSlayer. Another refundable credit that is huge for us, I would say 80% of our customers or our clients receive the earned income credit. And the thing about this, it is refundable. It's going to put money in the taxpayer's pocket. Not only does it reduce tax liability, but any additional will come back to the taxpayer as a refund. The earned income credit is a refundable tax credit for most people who work but do not earn high incomes. The purpose of the EIC, and that's what you'll hear us refer to it mostly as, is to reduce the tax burden and to supplement the wages of working families whose earnings are less than the maximums for their filing status. Eligible taxpayers can receive a refund with this credit, even if they have no filing requirement, owe no tax, and had no income tax withheld. So that's why it is called a refundable credit. All taxpayers and dependents must have a valid Social Security number by the due date of the return, excluding extensions, to claim the credit. The credit will appear on line 27 of the 1040, and TaxSlayer automatically puts that amount on that line. Now let's talk about earned income, and I'm sure you talked about this under the income section earlier. But in order for the taxpayer to get this credit, they do have to have earned income. And it's not unearned income. Earned income, which we talked about earlier, includes wages, union strike benefits, self-employment, non-taxable, excuse me. Let's pause for a few minutes. Okay, let's continue. When we talk about income that does not qualify for the earned income credit, we're talking about such things as interest and dividends, Social Security benefits, welfare benefits, alimony, child support, unemployment compensation. All of this can be found on page 1 of section I in the 4012. Let's look at the eligibility requirements. This page outlines what the eligibility requirements are. It can be found page H-4 of the 4012. There are rules for everyone. There are rules if you have a qualifying child, and there are rules if you don't have a qualifying child. Let's look at rules for everyone. Taxpayers and qualifying children must all have a Social Security number that is valid for employment by the due date of the return, including extensions. Filing status can't be married filing separately, and of course we do not prepare those returns. Must be a U.S. citizen or resident alien all year. Can't file Form 2555, and that's related to the foreign income. Can't have investment income of $3,650 or more, and pay close attention to that because you will see that again. But the investment income must be $3,650 or less. Can't be a qualifying child of another person. Now, Part B, rules if you have a qualifying child. The child must meet the relationship, age, residency test, and joint return test, but not the support test. The child does not have to be your dependent. Qualifying child can't be used by more than one person to claim the earned income credit. The taxpayer can't be a qualifying child of another person. And Part C, these are rules if you don't have a qualifying child. Must be at least age 25, but under age 65 as of December 31st. Can't be the dependent of another person. Must have lived in the United States more than half the year. Can't be a qualifying child of another person. Now, there are adjusted gross income limitations. You must have earned income to qualify for this credit. Your earned income and adjusted gross income must be less than $50,954, $56,844 for married filing jointly if you have 3 or more qualifying children. Then the income reduces if you have 2 qualifying children, 1 qualifying child. And the amount for no qualifying child is $15,820. That's for our single taxpayers. There are some special footnotes that we need to bring to your attention. If the taxpayer's Social Security card says valid for work only with INS or DHS authorization, the taxpayer can use the Social Security number to claim the EIC if they otherwise qualify. If a taxpayer or spouse is filing a joint return or a dependent has an individual taxpayer identification number, which we refer to as an I-10, they can't get the EIC. And those numbers normally start with a 9. I-10s are issued by the IRS to non-citizens who can't get a Social Security number. If the taxpayer's Social Security card has a not valid for employment imprint, and if the card holder obtained the SSN to get a federally funded benefit such as Medicaid, they can't get the Earned Income Credit. To meet the joint return test, the child cannot file a joint return for the year unless it's only to claim a refund of income tax withheld or estimated tax paid. Taxpayers turning 25 on January 1st are considered to be 25 as of December 31st. Taxpayers reaching the age 65 on January 1st are still considered to be 64 as of December 31st. And no worries, based on the information that you have input into TaxSlayer from the intake form, this is automatically factored in by TaxSlayer. Taxpayers cannot file an amended return to claim the credit for a year that they did not originally have a valid Social Security number. A few years back, taxpayers could do that, and some taxpayers might even ask you when they come into, when you talk to them about this particular situation. But again, they can't file an amended return in order to claim this credit now that they have a valid Social Security number for a prior year. Caution, the IRS cannot issue refunds before mid-February for returns that properly claim either the Earned Income Credit or the additional child tax credit. Let's pay close attention to disallowance, because this can impact the processing of the tax return and can cause the return to be rejected, which will delay the processing of the tax return and the taxpayer getting their refund. But you would find this in TaxSlayer under Federal Section Deductions Credit Menu, claiming refundable credits after disallowance. Form 8862, information to claim certain credits after disallowance must be completed for any taxpayer whose Earned Income Credit for other dependents, child tax credit, additional tax credit, or the American Opportunity Credit was previously reduced or disallowed, and the taxpayer received a letter saying they had to complete the Form 8862 to claim the credit the next time. If the IRS determines a taxpayer claimed the credits due to reckless or intentional disregard of the rules, not due to a simple math or clerical error, the taxpayer can't claim the credit for 2 years. If the error was due to fraud, then the taxpayer can't claim the credits for 10 years. And again, how will we know that these credits will impact the tax return or have been disallowed previously? We will look at Part 5 of the 13614C. Number 4, have Earned Income Credit, Child Tax Credit, or American Opportunity Credit disallowed in a prior year? If yes, which tax year? So we need to be sure we check that section of the intake form. Now, another credit that is refundable relates to the Affordable Care Premium Tax Credit. Under the Affordable Care Act, the federal government, state government, insurers, employers, and individuals share responsibility for improving the quality and availability of health insurance coverage in the United States. Note, currently, there is no penalty if individuals do not have health insurance. For some previous years, that penalty could have been a hefty penalty, but now the CARES Act has eliminated that. Okay. If someone on the return had health insurance for any time in 2020 through the marketplace, or sometimes it may be referred to as Obamacare, they will receive a Form 1095-A. Now, this 1095-A is very critical. The taxpayer must give you this form. If they don't have the form, then we can't complete the tax return. Because if they file the tax return and do not include information from the 1095-A, the return is going to reject, and that's going to delay the processing of the tax return and delay the refund. If advance payments of the premium tax credit, and you may hear it referred to as APTC, were made for coverage of the taxpayer or dependent, the taxpayer must complete Form 8962. And based on the information that you input into TaxSlayer, this form will be automatically completed. Now, this section has two implications under other taxes and under refundable credit. Now, under other taxes, Schedule 2, Part 1, Line 2, that talks about the excess advance premium tax credit. If the income is greater than what was reported to the marketplace, so the APTC greater than what it should have been, then that's going to result in additional taxes. But the refundable credit part would appear on Schedule 3, Part 2, Line 8, and that is the net premium tax credit. Income less than what was reported to marketplace, APTC, less than what it should have been. So those are the two implications of the premium tax. New for this year is the recovery rebate credit. And sometimes that's referred to as the stimulus payment. And eligible taxpayers who received a smaller than expected economic impact payment may qualify to receive an additional amount when they file their 2020 federal income tax return. Pay close attention to this section because you will see it again in one of the scenarios. The EIPs are technically an advance payment of a new temporary tax credit, not normally referred to as the recovery rebate credit, that eligible taxpayers can claim on their 2020 return, Form 1040, Line 30. Under the basic information section in TaxSlayer, there is a drop-down box that addresses this, and you would need to click on that icon so that you could enter the correct information. Now, the recoverable rebate credit will not reduce a taxpayer's refund or increase the amount they owe when they file a tax return. It's not taxable and therefore should not be included in income on a 2020 return. U.S. citizens and U.S. resident aliens will receive the EIP up to $1,200 or $2,400 merit filing jointly. They may receive $500 per qualifying child under 17 and SSN or ATIN. They would have received a notice 1444. Now, with the new law of the $600 stimulus payment, that would need to be included as well if it impacts the taxpayer. Okay. Any questions? Be sure that you place them in the chat. Refundable credits. There is a credit for sick leave for the self-employed. And this is a lot of information, so pay close attention to page H-9 of the 4012. This came about as part of the CARES Act, and it affects certain self-employed individuals' refundable credits for sick and family leave needed as a result of the coronavirus. The form that you would complete is the 7202, and it's credits for sick leave and family leave for certain self-employed individuals has been created to allow self-employed individuals to figure these credits. Part 1 of the new form figures a sick leave credit, and Part 2 figures the family leave credit. So there are two different sections. These two credits will be included on Schedule 3, Form 1040. Form 7202 is filed separately by each taxpayer with net self-employment earnings, so a joint return may require two forms 7202 to be attached. Which credit is the taxpayer entitled to claim? If a taxpayer is unable to work because of these conditions, they're subject to a COVID-19 quarantine or isolation order. They're advised to self-quarantine. They have COVID-19 symptoms and are seeking a medical diagnosis. The taxpayer is entitled to the paid sick leave credit up to $5,110 in total for up to 10 days or 80 hours. If the taxpayer is unable to work because of the following conditions: they're caring for someone who is subject to a COVID-19 quarantine or isolation order, or for someone who advised to self-quarantine because of COVID-19. They're caring for a child whose school or place of care is closed due to COVID-19. They're caring for a child whose child care provider is unavailable due to COVID-19. The taxpayer is entitled to paid sick leave credit up to $2,000 in total for up to 10 days, 80 hours, if the taxpayer is unable to work because they're caring for a child whose school or place of care is closed due to COVID-19. They're caring for a child whose child's care provider is unavailable, due to COVID-19. The taxpayer is entitled to paid family leave credit up to $10,000 in total credits. Up to 10 weeks of qualifying leave can be counted toward the family leave credit. This can be combined with the sick leave credit. So a taxpayer could be entitled to a credit for pay for up to 12 weeks, 2 weeks of sick leave, and 10 weeks of family leave. These amounts are limited if the taxpayer also took Families First Coronavirus Response Act Family and Sick Leave as an employee. Employers are required to report these amounts either on Form W-2, Box 14, or on a separate statement. The Form 7202 has further information on the calculations. The paid sick leave credit and paid family leave credit are available from 4/1/2020 through 12/31/2020. And tab H of your 4012 has some additional information under other taxes, payments, and refundable credits. I know that was a lot to digest, but please use this as a reference page if you encounter this situation. Now we're ready for another poll question. A taxpayer has interest income of $4,500. His earned income is only $7,000. He is single, has a valid Social Security number, and is not the qualifying child of anyone else. Does he qualify for the EIC? You would need to answer either yes or no. And for the UTD students, please be sure you answer this question because this information is being forwarded to your instructor. You will have a couple of minutes to answer this question. If you answered no, then you are correct. His investment income exceeds the limit of $3,650. So since his investment income was $4,500, it exceeds the limit.